Bloomberg Audio Studios. Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. Happy Friday. This is Bloomberg Technology.
Long week coming up. We'll discuss the regulatory overhang for Apple amid the Justice Department's sweeping lawsuit against the iPhone maker. Full analysis ahead.
Plus, we'll get the read on the IPO ecosystem after Astera Labs and Reddit went public this week with strong debuts.
And talking of the big week, Bitcoin actually set for one of its worst weeks of the year as ETF demand that slows. We'll discuss that and so much more throughout this hour.
Apple, DOJ, antitrust lawsuit against them. And on Thursday's session, it had a real material impact on the stock. You can see actually we're sort of recovering, up 0.4% in the session. But I still think it was notable that finally there was a headline about antitrust relating to Apple and there was a clear stock reaction in that session Thursday. What happens next is the big question. For more, let's bring in Bloomberg's Mark Gurman, chief correspondent covering Apple. What's changed in the last 24 hours since we last spoke? Do we have any signals from how Apple is going to respond to this suit?
Yeah, I think reading through the lawsuit reveals a lot. It reveals that the Department of Justice had been working on the case for so long that I would say about 60 to 70% of their major points are things that have already been resolved. Apple doesn't believe, of course, they would say this, that the case holds much water. They don't believe that they're a monopoly. They seem to find it perplexing that the government is trying to position them a monopoly, whereas they believe they only have about 20% global smartphone market share. I think that Apple is prepared for a fight here. I doubt they're going to settle. They've settled in some cases, but I don't think that Tim Cook has shown a willingness to settle. I think Apple believes, and based on my read of the lawsuit, I'm not seeing much harm towards consumers. I'm seeing a lot of harm towards developers. I'm seeing harm towards partners and some rivals. But again, here are their top 5 issues, the Department of Justice: a lack of cloud gaming support, a lack of message interoperability, a lack of super apps, which are things like WeChat, a lack of support for third-party smartwatches to the same degree as the Apple Watch, and a lack of support for Apple Pay, the NFC chip, on third-party applications. I think of those 5 items, at least 3, I would say even 3.5 of those items have already been resolved. I expect the messages situation and the NFC situation to be resolved as well. But taking a step back here, despite that, I don't think the DOJ is making great arguments given the resolutions already in place. You have to be honest here. A lot of these resolutions are in place because Apple has been afraid of this impending DOJ lawsuit for several years, and they knew these were where they would be attacked, and so they knew they had to fix them. It just, for some reason, Apple implementing the fixes didn't stop the DOJ from moving forward anyways.
This is a global company. Tim Cook in China at the moment, seemingly all smiles, and some conversations happening with Baidu around potential generative AI, of course, as many would say, as expected. That was Wall Street Journal reporting, Mark. But what seems to be at stake here is a philosophical difference. Philosophy driving Apple and the way in which it wants its own ecosystem to work, and a philosophy that seems to be changing tack among regulators in the US and Europe as to looking at Apple as a whole, not just individual places that they act monopolistically.
Yeah, a few things. Well, of course, Tim Cook is going to be all smiles in China. He really has no other option. China is a very important market. And Tim Cook is a poker player. He's not going to show his true feelings about this DOJ lawsuit, certainly not in front of the press and in a public setting as China is. Apple stock took a big hit yesterday. I could think of 10 better reasons for you to sell your Apple stock than what's in this DOJ lawsuit. Apple will certainly have to implement changes. I would imagine that what you saw in the European Union regarding the Digital Markets Act changes, app side loading, opening up the NFC chip, you're going to see a lot of those changes over the next few years occur in the US. But I don't think that's going to do much to change the fundamental situation with Apple. They're making a lot of money from the App Store. They need to figure out a way to bring a next big hardware category to market. Everyone thought that was the car. That's probably what could have added 50 to 100 billion or more to Apple's bottom line on an annual basis. That's what could have doubled Apple's market cap to several more trillion over time. That's no longer happening. And so now I think the biggest issue for Apple is not regulation. It's not how the App Store is going to be impacted. It's how Apple is going to continue to grow its hardware business. And don't forget, 75% of Apple revenue is still hardware. Fundamentally, they are a hardware company. And so they really need to figure out how they expand there. But still, AI, that's another important component. And they need to figure out that situation too.
Need the next catalyst. Mark Gurman, we thank you for really breaking that all down. And we want to just delve into the overhang from a regulatory perspective, though, a little bit more, and the nuances around it. William Kovacic is with us, George Washington Law School, Global Competition Professor of Law and Policy. You worked at the CMO over in the UK at one point. And William, to that end, we all know that these sorts of legal wranglings are distraction. How much impact do you think it will have on a business model?
I think the distraction comes from the number of people inside the company you have to commit to support the litigation. We don't know what that number is, but the experience in other major cases is that this can be a significant drag on the company. You have also the inhibition that comes from the pending lawsuits. Companies don't want to provide additional ammunition for prosecutors. It means that they're not quite as agile, not quite as adroit in developing business programs. I realize these are somewhat intangible consequences, but I think cumulatively, when you take all of the developments we've just been talking about in the United States and abroad, it's an avalanche of regulatory oversight that has to sap, to some extent, the creative energy of the company.
Mr. Kovacic, we sometimes talk about on this program regulating through the courts, you know, a legal action to get a result that's the bigger picture. Is there an avenue where Apple and the DOJ can just work this out outside of court?
I would think there's always the possibility of reaching a solution. The solution, though, is going to have to be one that persuades the Justice Department that the overall aim of any specific settlement is not subject to evasion by additional adjustments in the business model. They'll have to be confident that the solution is one that they can monitor and oversee effectively. I think that there would be a willingness to discuss settlements, but a major message that has come from the agencies in the U.S. in recent years is a great deal of skepticism about the efficacy of many settlement arrangements and doubts about how readily you can implement them and be effective.
In your reading of the suit itself, do you think the DOJ has a point here?
They do have a point, and the point is one that in a sense involves, again, a collection of intangible considerations. But there's anxiety about the possibility that incumbent firms that have a significant market position will, through a variety of tactics, diminish the emergence of alternative technologies and new business models. That concern might be very much the feeling that antitrust law failed in the last 30 years to deal effectively with the emergence of new tech. And I believe a state of mind, a perspective that has a tight grip on the agencies is that they're not going to allow the perceived permissiveness of the past to continue. And it means that they're going to dig in and look carefully at anything that appears to be an effort by an incumbent to see that new technologies, new business approaches do not emerge.
This is DOJ action. We've seen FTC have a similar focus, but sometimes this is political. In an election year, does this sort of continue?
I'm going to give you a bit of speculation that I could never prove in a rigorous way, but I noticed that President Biden's opponent, in many instances, has been skeptical of tech. Now, that skepticism has been focused in particular on the information services platforms that are involved in advertising, involved in social messaging. But it was Donald Trump's Justice Department that initiated the Google search monopolization case. It was Donald Trump's Federal Trade Commission that began the lawsuit against Meta for its acquisition of Instagram. It could entirely be possible that, at least for tech, given the way their political contributions go, given his concern about the role they've played in his own electoral process in the past, that he may look at the FTC and the Department of Justice and say, keep up the good work.
It was a Trump DOJ as well when this was first initiated with Apple back in 2019. William Kovacic, we thank you so much. George Washington Law School, absolutely brilliant to get his take. Meanwhile, coming up, look, we're going to be chatting to a head moderator of Reddit forum, Wall Street Bets. You know it well. Noah Al's going to be joining us. Find out how Reddit's IPO, how it's affected the user base. This is Bloomberg Technology.
The fourth largest IPO of the year. Reddit climbed 48% on its first day of trading yesterday after pricing at the top of its marketed range, raising $748 million. Let's bring in Bloomberg's Katie Roof, who has lived and breathed Reddit's IPO this week. That's true. I mean, for many people, I would say this went well, this IPO.
So it did the first day. Right now, it's trading down, although, yes, technically it's still well above the IPO price. It's not really much above where it opened yesterday. And so I think there's two numbers to watch here. It's the $34 where it priced at the top of the range, and that's where the insiders, you could say the institutional investors that have banker connections, that's where they bought, and then some of Reddit's top users were able to buy at that price. And then there's everybody else, which bought at that $47 a share where it opened yesterday, and right now it's trading at 47-ish. So, and it was actually dipped below that opening price this morning for a little bit. So some people could have already lost some money on Reddit, but most are making money.
And certainly long-term investors have cashed in here potentially, Katie. I'm interested as to what this means for ongoing IPOs, what this means more broadly for money left on the table. We want IPOs to do well, bankers certainly do, but the people raising the money don't want them to go too well and feel that they could have raised more.
Yeah, the money left on the table argument is an interesting one. It sounds like what you're referencing is where they could have raised even more money and had less of a pop. I think it's too early to tell whether Reddit allowed for too much of a pop. As I noted, it's already trading lower today, and, we'll see what happens next week. But, it depends on what they're optimizing for. If they're just optimizing for raising a little bit more cash, then you want to price it high. But you don't want to make a bad first impression on the stock market because it can be really hard to recover from that. And so that's, the argument that the bankers will make about why they price it to pop. They also want these insiders, these large anchor investors to keep buying more shares, in this IPO and IPOs to come. And they're not going to do that. They're not going to take that risk on a new listing on the first day unless they feel like they're getting some sort of discount.
Katie Roof, go get some rest. We thank you so much. Should we brace for more IPOs to come in the next few weeks, I'm sure. But, well, we want to get a take on how the users, those Redditors, are feeling about the company's IPO. They had a chance to buy in, and of course we know they're a vocal bunch. Noah Al with us is a senior analyst at private equity-backed healthcare company, but has also been a Reddit user for more than 10 years, a moderator for the forum Wall Street Bets for 9, spending the most recent 3 years as a head moderator. He joins us now to tell us more, well, basically about Reddit's debut. How has Wall Street Bets, how has your community reacted? Have you been positive on it?
It's really been a mixed bag. There's a ton of positivity, but also a lot of people excited to short, buy puts. But all in all, they're just excited for the volatility, and that's absolutely what we're seeing here today.
Noor, last week on the show, we reported on the post that Reddit made itself saying, we're going to do an AMA, and we will answer the questions in video format, selecting the most upvoted posts. At the time that we reported it on this program, the most upvoted post was, why are you even going public? It's not a great vibe right now. Just give me your reaction to that. I mean, it's the function of Reddit, ironically, pushing the management to think again.
Absolutely, yeah. I think this is actually a great time for Reddit to IPO, so I'm surprised. Certainly there was a lot of turmoil over the past year, but if you look at what came out of that from a business perspective, it's actually been very positive. We saw with the Reddit protests that actually people found Reddit completely indispensable. There was so much opportunity for a competitor to take Reddit's place, and nothing came out of it. So this just goes to show how deeply ingrained Reddit is in the zeitgeist and that it's here to stay.
No, there are many Redditors and indeed moderators that have big concerns on Reddit's plan to license user and platform data to AI companies to use it to train LLMs. What's your position on it?
From a business perspective, it's definitely a risk. We're seeing that the FTC is also looking into this, but it is a huge opportunity, and Reddit owns something that is very special for LLMs, and that is real-time user reactions to what's going on in the world around us. And that's something that I think no other platform has. So it's a great opportunity for Reddit to make money off of that and then turn around and invest that money in improving the user experience.
No, I want to ask about the evolution of moderation, because many would say in anticipation of the IPO, Reddit really got ahead of ensuring that this became a safer space to be able to comment. Does that stand? Has anything been lost in the focus of needing to clean up the platform?
We've definitely lost a little bit of the chaos and grit that you would have seen on Reddit 10, 15 years ago. And although that does lose some of its charm, I think it's more reflective of the state of the internet rather than Reddit as a platform itself. We're seeing all platforms, social media platforms, censor in response to government regulations and laws that have been placed on hate speech and other types of speech. So Reddit is actually maintaining its position as the front page of the internet and simply reflecting what is on the internet through these policy changes.
Wall Street Bets was what we talked about day in, day out in 2021 through 2022. Name being made around GameStop, the power that Redditors had in that moment. What do you think the power is of Redditors around the Reddit stock itself?
It'll be interesting to see. It'll be interesting to see when Redditors feel empowered that the actions they take on the platform can make a meaningful impact on the stock price of Reddit itself. Like with the GameStop debacle, we saw over 1 billion page views in a very, very short period of time in a month. And we saw that continue for several months. So to think that Redditors now, who might be investors themselves, can have a positive impact on the stock will simply deepen their relationship with the company and with the platform.
No, we just have 30 seconds. For someone that has no idea what Reddit is, what's your pitch for them to get onto the platform?
Reddit is a city that is incredibly deep with countless communities to fill every need that you knew or didn't know that you are interested in learning more about. If you've got an intellectual curiosity that can't be satisfied, Reddit is the place for you.
Head moderator of Forum Wall Street Bets on Reddit. And I point out that moderators are volunteers to all intents and purposes. Noral, great to have you on the program.
Time now for Talking Tech. First up, Meituan's quarterly revenue, it climbed better than expected 23%. Now that's a sign that the company is actually making some headway in its efforts to fend off a challenge from ByteDance's Douyin in China's meal delivery arena. Now shares in the company are up this year after losing more than half of their value in 2023. Plus, Huawei and a secretive chip-making partner in China, well, they've filed patents for a low-tech but potentially effective way to make advanced semiconductors. Now, we're talking about self-aligned quadruple patterning here, or SAQP. Basically, it's raising the prospect that China could improve chip production techniques despite U.S. efforts to halt its progress. And lastly, Tesla, we're going to stick with China here because it's reduced production at its plants over there amid some sluggish growth in EV sales and intense competition in the world's biggest auto market. Now, the car maker has instructed employees at its Shanghai facility to lower production of the Model Y and Model 3. That's 2 vehicles that Tesla actually makes over there in China by working just 5 days a week instead of the usual 6.5 days. All of this, according to sources. Ed.
British audience. In the UK, pay attention. Vodafone and Three's UK combination is facing a deep check by the UK Competition Markets Authority, the CMA, the regulator. They issued a statement Friday saying they're concerned and they don't buy the argument from Vodafone and Three that combining the two would mean better deals for customers. Vodafone's London-listed shares actually up 1.8% with a little to go. But it's an interesting story about consolidation in that market. This is Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Let's talk about this whole new wave of IPO names, Reddit, Astera Labs debuting this week, and just whether or not that's going to open up the pipeline a little bit more broadly. EY IPO practice co-head Rachel Goering is here to get your take basically on the feel-good factor right now. Thus far, these companies have come to the market and come well. Does that mean suddenly the Churs, the other names that we've been waiting for a long time, are going to be galvanized, do you think?
It definitely helps the momentum for what we're expecting in the IPO market, the pipeline that we're seeing come through. As you all were noting, though, the post-IPO performance of these companies, even the ones before them, will really help continue setting the stage and help influence what will continue coming to market over these next several months and throughout the remainder of 24. We've got, positive momentum. The trends are all going in the right way, but not without its challenges. We're in a political, cycle, a political election cycle this year. So, there's going to continue to be elements and dynamics that everyone's going to have to navigate.
Dynamics being also that the market is hungry for AI names. When you're advising these companies, when they're coming to you saying, I want to navigate liquidity events, I want to analyze the market, do you think about basically where they need to be dining out on AI, for example?
Well, AI is certainly something drawing a lot of focus, interest, particularly from investors. And when we think about AI, I think about it in kind of a few different buckets. You've got the pure play AI companies, those that are developing the technology. There is a lot of continued interest in this area, particularly in the private financing space. So these companies are generally getting funded. And will we start seeing a flood of IPOs from them over the coming months and year? Maybe not, onesie twosies, but they're getting the financing they need. They're developing the technology. But then I also look at other companies and how they're employing AI within their companies and relative to their strategy. We're seeing that play out. We're going to continue, not without skepticism from investors, kind of proving it to me. And then you've got those kind of in the broader ecosystem that we're seeing right now and how they're contributing to AI and that broader ecosystem. And we're going to continue seeing those come to market as well.
Rachel, this is exactly what I was writing about in my column in Tech Daily this morning, that Reddit, for example, got its AI story right going into the IPO, the data licensing business. I think what would be interesting to learn from you is what's more important, that in the S1 process and the roadshow, you sell your AI story, or is it more important that actually now a company like Reddit is listed, they can prove they have an AI business, after the fact that it's actually real?
I think both are critical for obvious reasons, but where we're seeing, even when you're putting that into your S1, going through your roadshows, investors asking, to prove it. So it's not just about writing about the possibility and the idea, but what have you done even up to this point to share with investors how you're proving this out, how you truly have a strong plan that you're then now executing on, and then proof will be in the pudding. Post-IPO, how you're coming out and continuing to execute and perform to back all of that up. And so as we continue to watch the performance of these stocks, 2 months from now, 3 months from now, so forth, they've got to continue demonstrating that performance and stay good on the promises and commitments they made.
Rachel, how do you assess this week's IPO window? I don't even know if we call it a window, versus what we saw in September?
This is, to me, demonstrating, we've got investor interest around IPOs. The companies that are coming to market right now is what we've expected. They're scaled, they're large, they have a name, they have some history, performance history behind them as well. So the risk profile is one of an appetite that's attracting investors. As they continue to perform, hopefully that starts to open up opportunity for more of the growth-oriented companies to start coming to market and really help drive some momentum and volumes over time, getting us back to those historical norms. But it's going to be a steady recovery. We're not expecting a big, balloon, if you will, or huge kind of spike. A steady recovery is what we've continued to expect throughout 2024 as we continue to see the market rebound.
And Rachel, what's the motivating factor here? Reddit wanted to IPO for years, since 2021. It was about a liquidity event for employees largely, but I'm sure time for investors to have some money back. What's driving other names?
everyone has their facts and circumstances. Some's going to be, they're going to be anchoring around valuations, and are they getting to a valuation that they're expecting liquidity for employees, for other founders? A lot of PE, right? We're going to start seeing how is PE going to start driving volume. They've been having some companies they've been holding for quite some time. They want to start entering back into the M&A market as we see rates coming down. Hopefully we'll see more M&A activity, even more from PE. I think that's going to start influencing some exit from that stage as well.
We want to thank you, EY IPO practice co-head Rachel Gehring there on the IPO landscape. But we just want to stick with, well, companies going public. Not all of them do IPOs. Some of them do SPACs. And former President Donald Trump's media startup is likely to debut as a public company in coming days, having voted today on whether the blank check company Digital World Acquisition can proceed with taking Trump Media and Technology Group public. It runs, of course, Truth Social, the platform. And it's been a long-delayed deal, and it seemingly is now approved, and a number of insiders from management to sponsors and even former associates who sued to stall or block the deal stand to pocket millions of dollars. And what have you got?
Okay, coming up on the program, we're going to dive into the world of climate investing, AI, what on earth happened this week in IPOs, everything and anything that we've spoken about this week with Initialized Capital partner Kim Cutler. Really looking forward to that conversation next. This is Bloomberg Technology.
This is the Blackwell GPU, or Graphics Processing Unit, NVIDIA's next-generation AI accelerator. And it's the star of GTC, NVIDIA's annual developers conference, which has been dubbed the Woodstock for AI. The B200 is more powerful than the H100, the prior generation AI accelerator that's driven NVIDIA to be the world's third most valuable company. Compared to Hopper, Blackwell offers 2.5 times the performance for training large language models and 5 times performance for running the model, a process known as inference. NVIDIA will offer Blackwell in different forms, including as the GB200 superchip, 2 Blackwell GPUs and 1 Grace CPU in combination. Trays and trays of GB200 go into liquid-cooled rack-scale systems like this and ship to server companies and cloud providers for their data centers. It's a market that NVIDIA's CEO says will start at $250 billion annually and grow from there. The technology is capable of processing AI models with 1 trillion parameters. At GTC, crowds literally circled around the single demo server rack in droves. The real thing starts shipping in late 2024.
So among everything else, GTC ended last night, Caro, and it was all about bow down to Blackwell and the deity, whether you're an AI startup founder or you are a Dell or an infrastructure company, bow down to Jensen Huang. And that might sound extreme, but trust me, there on the ground, it was true.
And share prices really reaped the benefit as well. Not so much of NVIDIA, but sort of those that he anointed, the synopsis of this world. You say Dell as well. Some of these companies managing to push on higher because we are starting to see how they're able to tap into this ecosystem that basically is the driving force from an infrastructure perspective of everything that we now talk from a value perspective in, public and private markets.
And as we've been saying, the show, get the AI story right. Because AI was also a big part of the story yesterday for Reddit's public listing day. Initialized Capital celebrated the IPO of its portfolio company, which is banking on licensing its users' data to builders of large language models to fuel Reddit's growth. Let's bring in Initialized Capital partner Kim Cutler for more in today's VC Spotlight. I wrote in my column today, Reddit got the AI story right. I just thought it was really interesting that they went there with that. What did you make of it?
I mean, I think it's a tremendous day for the whole team there, for Steve, for Alexis. That company in particular has a long history and close ties, obviously, with Sam Altman, who runs OpenAI. Yes. And so I think that relationship over the last decade or more really benefited their ability to ride this wave. And Reddit itself is an incredible consumer internet property. I mean, I'm a user multiple times a day, every day. I mean, the wealth of information that they have in all the different sub-communities and the way that people talk honestly and openly and freely about what they think, it's just an incredible data source and training set. So
what I find so interesting, particularly in the context of where Initialize will deploy capital, right, the types of startups that you'd invest in, is Reddit's an example of where you don't need to be a builder of large language models or an infrastructure play to be a participant in what's happening in AI. Do you have any parallel examples of companies you think will benefit from the infrastructure investment that's happening?
I mean, I think for us, we've long done many different deals that have, very specific applications to different workflows and different industries. So for example, you could think about the healthcare use case. We have a company called Glass Health that supports medical professionals and diagnoses. We have another company called Parcha that, serves as an AI co-pilot for financial compliance. And so there's all these different specific industries with specific legal requirements, workflows, and ways that people work that will need, very honed and refined applications of these foundational models.
And it's a long way coming for some of these checks that you've made into the Glass Health that you mentioned, Pano Arena, some of these other AI adjacent names that you've invested in. How are you thinking about exit strategy, though, longer term? What's been so interesting about this week was also the Microsoft, basically, acqui-hire of Inflection. Mustafa Suleyman, originally of DeepMind, going in to be the head of consumer AI for Microsoft. It feels as though big tech juggernauts are partnering in more and more innovative ways to some of the large language model companies. But how broad does that go for the entire ecosystem here?
Yeah, I mean, I think some of the developments that we've seen this week are a reflection of consolidation in players in the foundational market, the foundational model market. So obviously there are companies that are far and away, have tremendous, revenue, revenue run rates, and I mean, thinking like ChatGPT and Anthropic, and then companies that aren't quite at that level or don't have that same level of revenue growth, are having to make different decisions about, what they need to do given the cost of compute and the cost of going forward. I think, as a seed stage investor, we have companies that we're working with for, we might be working with them for 5 to 10 years before we go, public. And, if I look at the earlier some of the earlier funds, our previous IPOs like Instacart and Coinbase have also had, a very positive momentum over the last six months to a year.
Yeah.
And then going forward, we're going to have companies that perhaps you and I will be talking about in 5, 7, or 10 years.
What's been interesting this week in the context of AI, whether it's US-China relations, but there's also the context more broadly of where the government plays with this. We had, of course, the big announcement from Intel getting some more subsidies to be able to be building here in the United States. And I know that's something that you're thinking a lot about in the context of climate technology as well. We have money being pushed from the EV perspective this week, regulation being pushed from an EV perspective to really perhaps enhance electric vehicle manufacturing here in the US. Gamal, when you're thinking about the opportunity, IRA or another way of investing in climate tech, does that stick?
Absolutely. I mean, the government, the IRA has provided a number of, carrots and sticks, predominantly carrots, that have tremendously expanded the market for some of our companies. So, for example, having more punitive measures around methane emissions is a real benefit to one of our companies, Orbio, which is using satellite imagery to really pinpoint methane leaks from specific facilities. The incentives in the IRA around, revenue or government purchases of carbon removal are also helping to mature that market. And we have another company in Southern California from a former SpaceX engineer called Clarity that is doing carbon dioxide removal at, with lower energy intensity and usage and cost.
Sure, because right at the top of your blog post, which I read this morning, you were talking about the CHIPS Act.
Yeah.
Lower down at the early stage. Is there any benefit felt by the CHIPS Act?
In terms...
Or the Inflation Reduction Act?
Sorry, Inflation Reduction. That's right. I mean, there's obviously benefits from both, but if we're talking about, a long-term investment in, the United States ability around manufacturing and deep tech, I think that's, bringing in a lot of, tax credits and tax incentives around building facilities here in this country. So, for example, to really get carbon removal to the next stage, we're going to have to see facilities all over, the United States, particularly in, in the Southwest, where Clarity's looking to do its first production facility, its first facility as well. And that's going to create a tremendous amount of jobs for all kinds of Americans.
Initialized Capital partner Kim Cutler, great to have you here on set in San Francisco. Thank you.
I love playing chess, and so this is one of the things that y'all have enabled me to do, something that I wasn't able to really do much the last few years, especially not like this. I had to use like a mouse stick and stuff, but now it's all being done with my brain.
Just part of a live stream with Neuralink's first brain implant patient, showing a quadriplegic man who was able to play video games and online chess using just his mind. Neuralink, of course, is a brain technology startup founded by Elon Musk. Its implant allows a patient to use their thoughts to control a computer. Ed.
Bitcoin has peeled back more than 10% from its all-time high and may be headed for one of its worst weeks of 2024. This is the appetite for spot Bitcoin ETFs seems to be slowing down. BitGo CEO Mike Belshey joins us now. That was the intro. What do you think is happening right now with Bitcoin?
Well, usually I do not like to predict price, but I think we're at a very, very good time. Of course, there's some consolidation. There's a saying, I guess, in the space that, hey, if you're not ready for my 20% drops, you're certainly not ready for my 600% increases. But overall, what we're seeing is some consolidation. The ETFs just launched. We've seen tremendous run up in a very short period of time. A little bit of pullback is happening, but all of the macro climate remains extremely bullish for Bitcoin, primarily due to what people know about the long term, which is what we care about most at BitGo, which is long-term macro. Looks like we're still going to be very solid with having a static supply of Bitcoin being something that you can count on that doesn't get eroded. And of course, fiat currencies continuing to do massive changes with debt and deficits and no sign of change for that front.
Bitcoin, we've got the halving coming up as well, potentially another underpinning of price. But who's been getting into these ETFs? Have you been able to monitor flows, Mike?
We have a little bit. Actually, so far, I think it's been mostly the smaller ticket sizes. So remember, institutions move pretty slowly, pretty glacially, frankly. I think we've seen a wave of retail here over the last 2.5 months. I think it's getting a little bit bigger. But the institutions, we've seen some smaller hedge funds come in, larger hedge funds will come in, pension funds are coming, and endowments are already here. So now that we have an ETF available, which is the distribution channel, which makes it super easy for everybody to participate, it takes a little bit of time to go through investment committees, but I think that we're starting to see that run up happen now all through the summer. It rhymes, so you should say it, 80K by May.
In the moment, the calendar item, the halving, what happens, do you think?
So the halving is an interesting pattern that people look at, but I think really the most interesting part is the long-term meaning of the halving. So Bitcoin has a monetary policy, which was set in motion back in 2009, and it has remained completely unchanged since that time. It's the longest standing unchanged monetary policy in the history of mankind. And this halving is a demonstration that Bitcoin has a solid commitment, unchangeable commitment to that policy, which will keep going. So with the halving, the supply decreases on a block-by-block basis, which means that we see a lower rate of inflation. Some measure this stock to flow and other measurements of how you compare that to other assets and how they inflate. But Bitcoin's in a very good stead as one of the most static supply assets on the planet.
Mike Belshey, it's been great to catch up with you. Thank you so much. BitGo CEO, as we have seen, of course, one of the worst weeks for Bitcoin this year. That does it for this, though, edition of Bloomberg Technology, Ed.
What a week it's been. What an end to the week. Check out the podcast. So many of you are listening to the podcast. The platforms are Apple, Spotify, iHeart, and of course we publish to all of our own platforms here at Bloomberg. From San Francisco and New York City, this is Bloomberg Technology.